Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a couple things. We're going to go over home builders and the costs of construction going up. We're going to touch on some recent events in terms of natural gas prices and your 1.7 billion in gold that they're not getting back. So if you don't own it, or if you don't hold it, you don't own it. And I'm going to go over one other thing with LNG shippers and the rates that are just absolutely rocketing higher. So we'll dive in here. Kind of let you know, it says the UK court upholds Boris Johnson's decision to not release Venezuela's gold. Your 1.7 billion of gold is now ours, UK tells starving Venezuelans. In its prolonged freezing of Venezuelan assets, the UK continues to withhold 31 tons of its gold stored at the Bank of England, with a new Supreme Court ruling supporting the seizure. We got on the right here, natural gas prices rise on colder weather forecasts. Investors expect freezing temperatures in the northern western parts of the country to cause more homes to turn up their heat. Or it's just the difference between outside temperature and then the heat inside stays the same, so that delta is bigger, which means more heating costs. I'm going to touch on LNG shippers are, quote, printing money despite huge volatility. LNG carriers boast the highest day rates of any cargo vessel type. Shippers can afford to pay eye-watering high freight because the profit of moving a cargo can be enormous. In mid-November, a cargo could be bought for $20 million in the US and sold for $120 million in Asia. The wild ride for spot rates began early this year as cold temperatures pushed up commodity pricing in Asia. An LNG carrier was chartered for $350,000 per day in January, a new all-time high for any cargo vessel. Then rates crashed. The U.S. Gulf Japan rates were down to just $16,800 in mid-March. Rates rebounded to a new record high last month. The Baltic Exchange assessment for the Australia-Japan route for a tri-fuel diesel engine LNG carrier peaked at $366,700 per day in late November. Lloyd's List reported that one vessel was chartered for $424,000 per day. So in 2020, it was at $16,800 in mid-March, and now it's all the way up to $350,000 per day. That is a huge price difference over just a little less than 2 years. Now, one thing I want to touch on are homes. We're in an expansion phase of real estate. And what that means is that house prices have been going up, inventory's been going down. And with the imbalance of how many home buyers there are in relationship to the supply, people are going to want to choose to build new homes. So there's probably going to be more and more new homes being built. We can see permits skyrocketing higher, and we're going to see new home builds go up. This is going to be inflationary. Now, what can slow this thing down? Well, expenses. And what can push all these prices up? The expense to build a new home. So when I was looking at this, I just wanted to see, well, what are new home build costs? What are construction costs doing? Are they flat? Are they going up? Are they going up just a little bit? Are they skyrocketing? What's going on with the expenses in construction and new home builds? So I did a little bit of digging in here, and I'm going to share what I found. What I've got here are the expenses when building a new home. There's permits and planning, foundation and framing, exterior, interior, outdoor structures, and electrical, HVAC, and plumbing that go into it. These are the major components that go into the expenses of building a new home. So that's kind of the overview of it. Looking at some of the costs here, it says the single family builders reporting how much cost of materials for the same house has changed over the past 12 months. And these are some of the costs of single family homes and the increase of how much it increased. The average is 26%. So in order to build a new home, the average cost increase was 26.1%. And this includes a variety of single family homes. It could be smaller ones, bigger ones. And depending on what goes into building it, depending on these types of costs and expenses, determines the cost of the overall build of the house. Because some obviously put different kitchens and bathrooms and all sorts of different fixtures into the house. Come down here, it says builder reaction to recent shortages and price increases in building materials. It says rising prices on your homes frequently is a reaction, 62%. Pre-ordering materials, 59% to the recent shortages. Include price escalation causes in sales and construction contracts. Waiting to list spec homes until completion or late in the construction process. They've been delaying that, 40%. Cost plus pricing. Abandoning certain projects, 20%. Obtaining price guarantees from suppliers. Including shared price clauses in sales construction contracts. Canceling sales construction contracts. These are the builder reaction to recent shortages and price increases in building materials. Now, these are the materials and the difference between May of 2021 versus June of 2020. You can see oriented strand board OSB is up 83%, plywood 81%, framing lumber 80%, copper wiring 70%, trusses, gypsum board over 60%, vinyl siding, HVAC equipment, steel roofing materials, plumbing, fixtures and fittings, insulation material, 52%. Structural insulated panels, windows and doors, hardwood flooring, steel beams, millwork, it's all rocketing higher. And here, this is very large increases, all greater than 26%. And I don't know when this was May of 2021, the average cost of a house. Now here's the construction analytics building cost index, the construction inflation. This is the all index value set to 2019 equals 100. So 100 is 2019. And you can see non-residential buildings, non-building infrastructure, and residential. And I'm just kind of looking at the red, and you can see how the index of the construction, the building cost index, has increased over time and how this is really starting to take off. What this is going to do, and if we've got all this money coming into the system, like we said, like we obviously know, we obviously see the M2 money supply shooting through the roof. We can see it in our lumber. We can see it in all these different metrics that we follow on the channel. I have a feeling what's going to happen is new home prices are going to continue to go up because of inflation and because of the cost of the materials. That's going to pull the entire group of housing higher. It's going to pull not just the new homes up because those costs are going to increase. It's also going to impact the current existing homes, and it's going to pull the pricing of all that higher. So what we're going to see is we're going to see the entire residential real estate market go up. It's going to go up and up and up and up and up because everything's going to compete against each other. If someone says, well, I could buy a new house, what's going to happen is they would just buy the new house if it's a viable alternative that is cost justifiable. Now, people are going to start to look at these things. They're going to say, well, a new house is 30 or 40% more than buying an existing home. I'd rather buy an existing home. So you're going to see all this demand swap back and forth between existing home, and then the preference goes to new home, which then swaps back to existing home based off of the price differences. So I think inflation is going to drive real estate even higher so long that people have access to credit. They can borrow money, and we are still in a very competitive environment, meaning that people are having multiple offers, they're going after homes, and it's going to continue to rise this thing higher and higher and higher. We are probably going to see wages go up. I think there's going to be wages increasing over this next year or two. I was reading an article about wage increases, and they were talking about kind of an average of 4% wage increase kind of baked into the cake here. So we are going to see wages start to go up. And I think this is all going to materialize in higher home prices. So we'll continue to monitor it. I'll do my monthly updates of when the data comes out on housing starts and permits, and also looking at home prices and what they're doing with inventory, home prices, and days on the market. So if that's all sounds something that you guys are interested in, give me a thumbs up, subscribe to the channel. If that sounds interesting, you want to track all this stuff. But this is a key input and factor to the thesis, because credit, new money going into the system against new homes is inflationary. It's a credit expansion. And this is going to drive some of it, because higher home prices across the board means more lending. And the wages will come. The wages will come behind it, moving on up. And when things become less competitive, when inventories start to get filled or they start to get more balanced, which we're not even close to doing that, we'll see it. And I think it's going to take some time. It's probably going to take 5-10 years for this market to build enough new homes to start equalizing things out. We have to build our way out of this problem. All right, guys. Thanks for listening. See you next video. This is Finding Value.